People say this was a surprise move. Some have even used the word shock. What's your view?
Yes, I think it is a surprise move. It is a significant change in monetary policy. I think previously we've seen 1% or 0.5% move up in the central bank rate. We've seen now a 4% rise. I think it is a surprise. It is a bold move. It's an indication that central bank has decided to deal decisively with inflation. Unfortunately, that might come at the expense of interest rates and economic growth.
Others are saying, unfortunately, it's a little too late. Inflation's already in the region of 17%. Growth is subdued at 4.1%. And the shilling's already breached the 100 shilling to the dollar mark. They should have done this a long time ago.
Absolutely. I think they are closing the stable after the horse has bolted. I mean, if you think about what importers are importing today is what they'll be selling in the Kenyan market in December around the Christmas season. So the impact of currency on inflation will continue at least for the rest of this year. I think this should have happened much later. I think Central Bank and the Monetary Policy Committee has a responsibility to be forward-looking and to anticipate inflation rather than to react when it's already gone too far. I think the target is 5%. Why you make a 4% rise in the CBR rate when the rate is at 17%? It's a little late in the day.
The other issue is how the banks are going to respond to this. Obviously, the lending rate is going to rise, but by how much? Because already we've seen some challenges that they're facing in terms of forex trading and the reluctance of many to be involved in the overnight window for the sale of shillings and dollars because of the fluctuation of these rates in recent times.
I think, yes, as I said earlier, the rise in the rates will be at the expense of interest rates, or the control of inflation will be at the expense of interest rates. So we will expect to see further rises in lending rates. I would not be surprised to see another 2–3% rise in the base rates, as we have seen quite a number of banks in Kenya already raising their base rates. Their margins have been significantly squeezed. The treasury bill rate is currently at 13–14%. While bank base rates are currently 15–16%. So that's an indication that we might expect to see further rise in lending rates.
I mean, the obvious concern is the balance of payments for Kenya, because what we have seen is with the rising of treasury bill rates, the rising inflation rate, it's made bonds and treasury bills less attractive for investors. What's going to be the case to really support portfolio inflows into this market and to help raise a little bit more debt and capital for the state?
Well, unfortunately, the immediate future is quite bleak in terms of fixed income portfolios, because the outlook is then for further rises in interest rates. I think the attractiveness really lies on the short-term instruments, the treasury bills and treasury bonds, because you're getting 14–15%. You've got a fairly flat yield curve. You're looking at long-term rates going only up as high as 16–17%. So there is still opportunity on the short end, but I think people would be much cautious on the long end in view of the new rise in interest rates. All
right. Now, we knew that the MPC would sit and make a decision today, and they'll do so for the first week of every month. But there's also this task team set up by Prime Minister Raila Odinga. There's also going to be dealing with this question of the depreciating shilling. If you were a fly on the wall, what would you expect to be hearing? Because already we're told we might see capital controls and controls on the exchange rate, currency peg, trying to limit how much forex is traded, creating parallel markets. What are we likely to see coming forward to give a little bit more impetus to the efforts of the CBK?
I think going back to the era of exchange control would be an unfortunate move, and I would hope that we don't go that way. I am hoping that perhaps the Prime Minister and his committee will come out and get a round table with the banks and discuss the issues around the currency on a more diplomatic level. I think there is clearly some level of speculation on the Kenyan shilling. It shouldn't be the biggest depreciating currency in the world this year. Depreciation of 25% is unjustified, and clearly there's something needs to be done. That I don't think is regulation. I don't think regulation will solve the problem. I think it would be better for more moral suasion on the part of banks and players in the market so as to bring stability to the currency. Again, I think currency is the critical thing. I think the central bank and the Monetary Policy Committee are attacking the inflation, but I think if they get the currency under control, it should bring stability to all the other economic fundamentals.
Now, obviously, the priority is going to be stability for the currency, managing inflation, but there's a third dimension, Paul, and that's growth. It's a tacit mandate for the central bank is to support growth. Q2 growth came in at 4.1%, largely supported by the agricultural industry and that sector, and the fact that a lot of them earn their money in dollars, and obviously a weakened currency makes it better to trade. That situation can't continue unabated going forward. So in terms of supporting growth, what can authorities do?
I think, yes, if you look at the quarterly economic growth figures from last quarter of last year, where it was about 6.3%, came down to about 4.8 on the first quarter, and now 4.1 in this quarter. There is a clear signs that the economy is slowing down. The rate of economic growth is slowing significantly, and something needs to be done. Unfortunately, the key obstacle there is inflation and exchange rate, which are the items that the governor needs to deal with. Once you fix that stability, I do believe that that should be able to spur growth back on track in terms of economic growth. But the outlook really for economic growth is that with the latest move on central bank to increase the monetary policy rates, we might expect further slowdown in the economy in the coming months.